With the introduction video out of the way, now let's start to move into the actual nitty-gritty surgery of becoming a robot. But before I can get to anything else, we just need to start at the absolute basic of all the basics is what is technical analysis. We need to all be on the same page. As robots, we want to make sure that our circuits and software and all that is computing the right information. And in order to do that, we need to make sure that we just have an understanding of, hey, what is technical analysis? So that's what we're going to cover here in this video. So let's first start off with just a broad overall general definition. Technical analysis is the study of market action primarily through the use of charts for the purpose of forecasting future price trends. Now, keyword here being forecasting. It does not say finding guarantees, finding for sures, telling the future with a crystal ball, always being right. It doesn't say anything like that. We are forecasting. And who does a lot of forecasting? The people on the news that tell you, hey, you better bring your umbrella or put on your winter coat. Weather people. Now, are weather people always right? Of course they're not always right. But what are they doing? What is, their chart here is their map. Their chart is the map, and they have their satellites, and they're trying to do what? They are trying to look at things and say, all right, it looks like there's a probability. It looks like it's probable. It looks like the situation favors this sort of weather. Now, does it happen every time? Absolutely not. That's why when you look, you say, if there's a 60% chance of rain. Now, how they get to 60%, I'm not a meteorologist, so I don't know. But they're trying to just say what the probabilities of something happening are, but there's never a guarantee. That's the exact same thing for charting. So what I'm trying to get at in a very simplistic way is that technical analysis is a tool by which traders can attempt to leverage probabilities in favor to their advantage. Just like a weatherman, weatherwoman is trying to say, well, this is what's probable of happening. You're going to probably want to take your raincoat because it's probably going to rain. And a lot of times it does rain because they know what they're looking at. Same with charts. When you start to know what you're looking at, technical analysis is just trying to leverage things into our favor. Now, there's no such thing as a guarantee, but it allows for educated guessing. The people on TV that are telling you the weather, they're just making an educated guess. The talking heads on the TV shows about anything with the stock market, they're all making educated guesses. For any person that is very thinking the stock market's going to go up, they always sit them right next to somebody that thinks the stock market's going to go down. How can that be the case? Well, both people are making an educated guess as to why they think a certain thing's going to happen. So at the end of the day, that's all the stock market is. That's really all anything in life is just one massive educated guess. Now, educated guess, if we were to remove this word out of here, guessing. Guessing is, there's nothing different. Guessing, sure, you're going to be right once in a while, but does guessing long term, is that going to give you any hope in anything in life? Not just charting, but anything. Of course not. But if you're always doing educated guesses, then that vastly is going to improve your probabilities and put favor and all that other stuff into your advantage. So keep that in mind. It is just an educated guess, but it's not a guess. Educated guess. There's a big difference between just straight up throwing darts at a random board and making an educated guess. So keep that in mind. But I want to start things off right. I don't want to sit here and say charting is the answer. Charting is the holy grail with technical analysis. You will never be wrong because that would just be a bold-faced lie. You're not always going to be right, but that's why there's precautions that you can put into place. But in terms of making educated guesses and leveraging things into our favor, that's the goal of technical analysis. Now, the core concept, what everything boils down to is technical analysis only cares about two primary events for a stock or for whatever sort of financial market you're looking at. And that is price action and the volume of shares, or in other words, how many shares are being bought and sold back and forth. That's it. That's all technical analysis cares about and boils down to at the end of the day. As you're going to see as we go through the course, all technical indicators, they always go back to these two things. They're all derived through the mathematics through these two key areas. Price action, volume of shares. Technical analysis assumes that the price and volume combination represents all relevant factors. So what do I mean by that? Well, as you go through and get more experience, you're going to see just stuff like this. When you look at the chart, you're going to see, that's weird. A stock got a surge of buying, which is volume, and the price increases right before an earnings call. Why? And then all of a sudden the earnings call is, we're doing great. We have new record sales. Well, that's odd. On the chart, it almost showed us that was going to be the case, because why else would people be buying, and why would the price be increasing right before that earnings call? Or another example, right before some sort of expected earnings call, again, the price volume rises and then price starts to go down. Now the earnings call hasn't happened, but this action, price goes down, volume goes up, and then all of a sudden the earnings calls happens. Yeah, we're our forecast for the future, we're gonna lower things down. We want to kind of step back. Things aren't going so well. Well, how did people know that? Well, the chart technical analysis says that it contains all. One of my favorite sayings is nobody can hide from a chart. If you are trying to say one thing, so a CEO, oh, I love this company, the company's doing great, yet the price keeps going down and down and down. I love this company, it's doing great, yet the price keeps going down and down and down. The CFO, oh, we are doing absolutely fine, and yet the price keeps going down and down and down. Who's telling the truth? At the end of the day, I don't really care what management is saying. I don't care what analysts are saying. I don't care what investment banks are saying. I don't care with upgrades and downgrades. All I care about is what is the price and volume doing. Because if price and volume are increasing, and yet everybody's saying how bad something is, I wonder if it's really bad. Technical analysis would say, that's all. Who cares about that? Who cares what people say? What is the chart doing? It goes back to the saying, talk is cheap. Put your money where your mouth is. And if people are just saying stuff, yet the chart, price action, and volume is doing the exact opposite, then you got to sit there and think, well, I think you're just blowing hot air. I don't think you really mean anything you're saying. And exactly, that's why I don't watch nearly the talking heads at all that much, because it's so many times you see one guy talking how great something is, and then the chart and the price action volume is going down. It's like, well, you can sit here and remember, management, they're just salespeople. They want to get you to believe. However, if the chart's doing the opposite of that, what really matters, what they're saying or what's actually happening? And what is actually happening is what technical analysis cares about. Now, within the family of technical analysis, there are different areas that you can look at, and it's one of those things where this is the beauty of technical analysis and charts is there is no exact right way to do it. Technical analysis is not 1 + 1 = 2. It's 1 + 1 = whatever you feel most comfortable with. So different areas that you could come across is Dow theory, Elliott wave theory, candlestick analysis, combinations of the above, and here in robotic trading, this is all going to be centered around candlestick analysis. And my goal is to get you to view the world in terms of candlesticks. And what I mean view the world, I just mean it's kind of crazy, but sometimes you'll look at a person and be like, okay, wow, they're really mad right now. They're getting angrier. Okay, looks like they're coming down. All right, they're going down more. Getting angry again. And as you learn about candlesticks, that doesn't make much, but that's all a candlestick right there, because that's all a candlestick is telling you, how high something is, how low, and everything. So that's what I want you to start to see, the world through candlesticks. There's so many situations that can be summed up with a candlestick. It's kind of crazy and scary, but as a robot, that's just going to be one of the unfortunate side effects is you're going to start to look at other world events other than charts in candlesticks. But that's what I want, a sporting event, and that's another good thing. A team could start out really strong, and then the other team comes back and knocks it back down, and then knocks it back down some more, but then the other team starts to come back, and then by the final, final bell, final whistle, whatever sport it is, it ends at a certain spot. So you'll be looking at, if you're a sports fan, I guarantee you're going to start to look at games in terms of candlesticks also. And it's one of those things where I found this comic, and I think it's pretty interesting. But reality can be so complex that equally valid observations from differing perspectives can appear to be contradictory. And I still don't know the answer to this. I don't think there is one because it's a trick one. But here I see 1, 2, 3, 4. But then over here I see 1, 2, 3. So I don't know what it is, but that's the point. That's what charting is. Everybody's going to have a different perspective. Everything's going to be a little bit different based on people's personality, comfort level, all that. So again, technical analysis charts is not 1 + 1 = 2. It is 1 + 1 = whatever you feel most comfortable with. I can't stress that enough. Now, fundamental versus technical analysis, both are kind of the two kind of kingpins of financial markets. Some people use a combination, and I can see where that kind of merit things. But like I said, to me, at the end of the day, all I care about, price action, volume of shares, and that's it. But if some people want to look at fundamental stuff, but what is fundamental stuff? Well, fundamental analysis is the need to research broad economic factors. Is the Federal Reserve going to increase monetary policy, decrease it? Is one big country, is their economy starting to contract, or is it still growing? Is it growing at the rate that it needs to? Did one country just attack another country? Just all sorts of broad economic factors. You're gonna have to look at the SEC filings where the company reports, hey, what's going on, and what's going on is reflected in balance sheets, cash flow statements. You're gonna care about the background of management. What did this CEO do before they came here? Do they have any sketchy background? Is this person shady? Are they coming from a success? I mean, all that stuff. And then just broad sectors a company may be in. So how's the oil industry doing right now? I mean, is the oil industry, conflicting with something else? Or how's this mining company doing? How's, gold or silver? I mean, you got to care about then the sectors that a stock is in. Technical analysis, the need to research price action and volume. Call me lazy. I take no offense to that, but instead of having to worry about all this stuff, and that's not an exaggeration. I mean, that's what fundamental analysis people, they need to care about. And some people are very good at it. So I'm not knocking them, but I really value my time, and a great time saver, if you want to throw a rescue raft out to your time, a great rescue raft or as far as I'm concerned, right over here. And this isn't even everything right here. I mean, you have to research that much more, but really, technical analysis, pull up a chart. Hey, what's the price action doing? What's the volume doing? Because remember, a broad economic, one country could attack another country, and everybody's going to be saying, oh, this is so bad for let's just say oil. Oh, this is going to be so bad for oil. It's going to be terrible, terrible. But yet, oil is going up in price, and it creeps up some more. Oh, this is going to be so bad, because this, that, and the other, all these, economic issues, and the cash balance sheet for this is going on. It's going to be bad. It's going to be bad. And yet the price keeps going and going and going. So at the end of the day, what really matters? What is making you money? Theories or price action? Theories or price action? Price action, what's going to make you money or lose you money? And that's what technical analysis is and only cares about. So that's, I can't reiterate that enough, but I want to, really drive that home. I want you to understand why I'm so big on charts and just give you as much confidence and faith in yourself that you made a great decision to say, I want to learn charts, because it is truly, a way to save yourself so much time, and it cares about what makes you money. Something, one country attacking another, indirectly, it can make or lose you money. But at the end of the day, people could be having all sorts of opinions and theories about what is going to happen, but what is actually happening, remember, actually happening, well, that's what technical analysis is telling us. Now, within technical analysis, there are three core assumptions, that pretty much everything revolves around. First one, we've been over it, but price volume contains all. A stock's price movement and volume represents all that has or may affect the company, sector, market, whatever chart you're actually looking at. Remember, you can look at the Dow Jones chart, which is telling you how the entire market is feeling. Or you could look at an ETF of, let's just say, oil again, and that's going to tell you what the oil market or oil sector is doing. Or you can look at an individual company. What is just that company? How are they doing? But the first assumption is everything is contained within the price and volume action, and that includes all fundamental data. So everything we've been talking about, we are just assuming that it's all contained within the price and volume, and that we don't need to consider anything else. Broad economic factors, market emotion and psychology, all that stuff are already priced into the chart. One exception, though, can be world events. There could be something where everything's going, and then something just totally random happens. And, for example, when 9/11 happened, I mean, the market just totally collapsed on that day, but rightfully so. I mean, talk about something that just was totally random. That's and there's nothing that can forecast that. So, it's not like a chart's going to forecast something like that. So, world events where, now sure, like I said before, if one country attacks another, okay, after that there can be all sorts of theories about how that's going to affect things. But when it happens just right out the gate, if it's totally unexpected, then that's something that nothing can forecast, and it's just going to always give the markets a jolt. But I think the image that best sums it up is, this is technical analysis right here, the hand, and then we were just holding everything about it right here. So the world of a chart, or the world of a stock or a sector or the overall market, is all within technical analysis, and we just hold that right in our hands. I guess this should be more of a robotic hand, but you get the point. So that's kind of how I look at this first assumption. The second assumption, and we're going to spend lots and lots of time in this as we go through the course, but the trend is your friend. Technical analysis assumes that price action prefers to follow the path of least resistance. After a price trend has been established, psychology says that future price movements will probably be in that same direction. Remember, as humans, we love to just follow the leader. Whatever is going, hey, that looks pretty trendy. Hey, those clothes are cool. Hey, that phone is awesome. Hey, this piece of technology, that's pretty great. It's kind of what's in, what's hot. What is trendy? Think about what trendy means. Trendy means lots of people are doing it. That's what the most people are doing, because people love to follow the leader. That's just psychology and emotion right there. So price trends and the psychology behind them, by doing that and understanding that, we can help to leverage odds into our favor. And this is pretty much what the market is. It's a bunch of sheep following a certain trend. Now, when does this sheep right here, so it looks like this one is at the leader of the pack, when does this sheep turn into a wolf? That's what charts and technical analysis are for. We are going to be able to look and try to forecast when a trend is going to change and when this sheep turns into a wolf, and then that happens, they lead all these sheep to the slaughterhouse without them knowing. However, that's where the guessers come in. That's where just the random, amateurs come in that don't invest in education. You are obviously not going to be one of these. You're watching this course. You have put your money where your mouth is. You have invested into your education, unlike all these people that are sheep. Now, at some point, and there's no denying, we want to be a sheep. We want to follow the trend. What is trendy? What is trend, or what is the price doing in terms of overall? Yeah, I have no problem being a sheep. However, I am watching this lead sheep like a hawk, saying, have they turned into a wolf yet? Have they turned into a wolf yet? Are they leading us to the slaughter? And that's what a robot, that's what our eyes, that's what we are going to learn to do with technical analysis and charts, is try to figure out when the conversion goes from a nice friendly sheep just truly leading the trend to all of a sudden, they're a wolf. They may be now starting to lead the sheep to the slaughterhouse. So, yes, I have no problem saying that I have no shame in saying that I love to be a sheep. I love to go with the trend, no problem with it. However, the one thing that differentiates me and is now going to differentiate you from other sheep is we are making educated decisions on when, okay, I don't think this is trendy anymore. Remember, we're all guessing, but you are going to make educated guesses as to when this lead sheep turns into a wolf. And then the final assumption of technical analysis is that we need to learn from past history. I'm sure you've heard it before, and it's true. As your history teacher told you, history tends to repeat itself. Due to human emotion, price action tends to repeat itself within a chart. And that makes perfect sense. There's a key reason why they teach history in school. They want people to understand what's happened so you can either try to avoid it or just learn from it. And participants in a market usually provide a consistent reaction to past historical situations. So there's certain psychological stimuli that produce predictable emotions, and this produces predictable behaviors. So by just looking at the past history, which is the past human emotions, we're going to say, okay, last time people felt this way, they acted like this, which caused that. That's what we're going to look at. Trying to look at past emotions, how people reacted, and knowing how they react, it's going to cause something else. It's going to cause them to behave a certain way. And that's the other assumption, is past history tends to repeat itself. Look at past history and see what happens. Now, is it going to happen every single time? No, but it's giving us an educated guess. It's giving us a logical reasoning to do something, to put our money at risk. Whereas just grabbing a dart and throwing it at the board, that's just total randomness. But by looking at past history and knowing that humans with emotions tend to repeat themselves and act in predictable processes, it can leverage things into our favor. And here I am again to hopefully start to annoy you with this because I want to get it across. But reminder, the second point. But the first thing is technical analysis is not limited to just stocks. If it contains human emotion, if it contains humans, then it contains emotion and psychology. Therefore, technical analysis can be applied. So whether you're looking to trade futures or options or forex or commodities or rice, that'll make more sense when we get to the candlestick one. It can be used. It can be used in other things. I mean, I'm trying to think. You could probably chart out your girlfriend if you wanted to. Or ladies, you could probably chart out your boyfriend or your husband or your wife. How are their emotions? They show up from work. Are they really mad and then really nice? And then it's all kind of emotion. And that's all it is. This will all make more sense when we get to candlesticks. But my wife could easily have a candlestick chart on me. When with my emotions, it just I'm an emotional creature. You're an emotional creature. That can all be charted out. Whether or not we're talking about stocks or anything, if it has emotion and psychology, then it can definitely be charted, and that's what technical analysis is. And remember, forecast, not predict. No such thing as a guarantee. We're just looking to put odds into your favor. And nothing in the world of finance is an exact science. Like I said, the only thing of exact science, and this can probably be debated too if you're trying to get really scientific, but 1 + 1 = 2. Yeah, that's an exact science. Assuming, I don't know, who knows, someone could probably make an argument against that. But really, nothing in the world is an exact science, and technical analysis is no different. So that's what it is. What do we care about? I'm gonna first quiz question. What do we care about? There's two things. Okay, hopefully you're saying we care about price action and volume of shares. Absolutely. What are the three core things? Everything is in the chart. The trend is our friend. And then finally, learn from past history. So remember that. That's what we're trying to accomplish with technical analysis.